Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and on today's episode, I'm joined by Edward Dowd, a former portfolio manager at BlackRock, where he managed a $14 billion growth equity portfolio for a decade. He is also an author and a founding partner of Finance Technologies. We're going to get his take on the panicked reactions to the recent sell-off in the broad market. Are people just blowing things out of proportion, or could this be the beginning of the end? We're going to talk about the brainwashing of the masses in both the US and Canada and how easily they fall for whatever the TV tells them to, the end of empire vibes that seem to be reverberating through Western nations, with radical ideology and self-destructive policies becoming the norm. We're going to talk about gold as well, of course, and so much more. So strap yourselves in for my conversation with Edward Dowd. Edward Dowd, great to have you on Commodity Culture. I've been wanting to have you on the show for a while now, so it's a real honor to welcome you. I want to start off by asking you what I do with all guests, and that is, what are the main themes and trends you're currently watching when it comes to financial markets, the economy, and geopolitics? You can take this wherever you'd like. What are trends in those areas that you think more investors should be paying attention to?
Oh, I think the biggest thing that most investors need to pay attention to is what happened in the last year and a half, 2 years under the Biden administration. Our firm does deep economic analysis. We have early cycle indicators, and we made a call that ended up being wrong. And a lot of economists were with us as well. We were calling for a recession at the end of 23, beginning of 24. And that turned out not to be the case. But when we tried to figure out what was wrong, our cycle indicators have great statistical history. So we asked ourselves the question, have the laws of fundamental economics changed? And as we figured out what was going on, it became apparent to us that under the Biden administration, especially in the election year, there was unprecedented deficit spending, crisis level spending when there wasn't a crisis. We were running 8% deficit to GDP ratio, which, and if you look at what they spent the money on, it was government jobs and illegal immigration, essentially. And that distorted the economy for a period. And the elephant in the room is illegal immigration. And that played with the job numbers, it played with the GDP numbers. And what everyone should be focused on is the new man in charge, Donald Trump. He's promised to reverse all those things. So that is going to have a natural effect of causing GDP to decelerate lower into what we believe is a deep worldwide recession in 25. If we continued the policies under Biden, it was becoming increasingly obvious that the GDP numbers were not that strong. It was a negative marginal return on government workers and illegal immigrants. So that policy was not sustainable. Those are all reversing, and we expect to see inflation coming down, home prices coming down, and of course, capital market equity prices coming down. And this is happening quicker than we thought. We put out a report at the beginning of this year that we're charging money for. It's for mostly institutional investors, high net worth, and family offices and RIAs. But it basically outlined what we thought was going to be a very difficult capital markets situation. But long term, it's best for the country to restructure away from fiscal dominance to that money getting in the hands of the private sector. So it's going to be a difficult road ahead for financial assets, but long term, we think it should be good. So most investors thought the economy was hunky-dory if they were just paying the headline numbers. There was also, if you remember, a lot of controversy on the payroll numbers. There was a combination of the illegals padding those numbers plus gross bureaucratic incompetence or fraud. We haven't figured it out yet, but the discrepancy between a book report, which we call the Quarterly Census of Earning and Wages, which my whole career I never paid attention to because it's a report that's done on a great lag. The September QCEW came out a couple weeks ago, and what that is, that's the BLS, who also does the non-farm payroll. That's their actual survey of 16 million employees, the real number. The non-farm payroll is an estimate. And the discrepancy between the QCEW and the non-farm payroll got to 7 standard deviation sigma difference in the June report, and it was also big in this report. So there was bureaucratic incompetence or fraud and illegal immigration that really gave a false appearance that the economy was going well. And if you really want to think about what the real economy was doing, Donald Trump was elected. The sole reason he was elected was the economy. He had going into the election, minus 2% real wage growth. Ronald Reagan had that going into the 1980 election, won in a landslide. Trump won in a landslide. And Bill Clinton had the same figure, minus 2% real wage growth in the 92 election. And his presidential advisor, James Carville, said famously, it's the economy, stupid. So what people need to understand is the Trump administration, and they're very strongly signaling that they don't care about the stock market. Scott Bessent said today he's not worried about a little stock market volatility. So they're focused on restructuring the economy. They're not focused on keeping government spending to keep the stock market afloat.
Hey guys, a quick break to hear from today's sponsor, ARK, silver, gold, osmium, and to let you know all about the special that they are offering at this point in time, which are 2023 silver kangaroos, 1 ounce coins, mint fresh at only $2.07 over spot. So be sure to reach out to owner of ARK Silver Gold Osmium, Ian Everard, today at 307-264-9441. You can also contact him by email at ian@arksgo.com. Make sure to tell him that Commodity Culture sent you. Once again, silver kangaroos, 2023, 1 ounce coins, mint fresh, $2.07 over spot. Well, supplies last. And now, back to the episode. Very interesting analysis. I want to talk about the broad market. It has been falling over the past week or two, and we've seen a lot of extreme reactions in both traditional and social media to this downturn. It's as if 2008 is happening at the moment, but on a historic basis, we're not yet at that level, although I have to admit we're continuing to drop again today. It is looking like we could be seeing a larger trend and perhaps entering into bear market territory at some point. What are your thoughts here? Do you think people are overreacting in general? At what point should people start getting worried about the broad market?
Well, a couple things. Structurally, the broad market was a bubble. And, in our report, we don't even talk about that because it's obvious. We put out on our website, we have a lot of free resources on our website, a lot of reports that we give away for free. We put out a piece analyzing the CAPE ratio. It's an analysis of the stock dividend yield versus bonds. And what we found is that during the great bond bear market that occurred since the Fed started raising interest rates, stocks took off and got to absurd valuations. And we're at a level, well, it's decreasing as the market goes down, but we were at a level where it was ridiculously obvious that on a risk-adjusted basis, asset allocators were too heavily invested in stocks and underweight bonds. And, as we predicted, a slowing economy is going to cause a reallocation of the asset allocators from stocks to bonds. And the market is down, I think, almost 10% in a couple of weeks. Look, I worked for BlackRock. I managed a growth fund for 10 years. This is what the markets used to do on a regular basis. So the panic I see is indicative that people are over levered, and this is a popping of a stock market bubble, and it could take a long time for it to unwind. I don't see a crash in the near term. We could have a 15% correction before we rally, or it could rally today. Don't know, but there is an overreaction, but longer term, it would not surprise me to see, if we go into a recession and our calls right, the stock market to do what it's done in other recessions, go down 50%. It went down 50% in the 70s, went down 50% during the great financial crisis, went down 50% during the dot-com bubble. It's just a question of how fast it happens. And to get down 50%, that only takes us back to January of 2020 levels, 3,300 on the S&P. And if you look at what the stock market's done and what people feel in their pocketbooks, the average Joe, there's a total disconnection between the real economy and the stock market. So structurally, Donald Trump inherited a all-time record high valuation market. Warren Buffett, about a year and a half ago, started accumulating a record stockpile of cash because he was uncomfortable. He's not a market timer, but he just says, I'm not going to put any new money in the stock market. So this is going to probably take time to unwind. And if you want to blame Donald Trump, go for it. But it was going to happen regardless.
I want to highlight a tweet you made recently. Speaking of the economy here, you said the speed with which Democratic politicians have suddenly discovered the plight of the middle class is absolutely hilarious. And yes, it's all his fault after 8 weeks in office. It's like they just emerged from a 4-year time capsule. More pathetic are the folks who buy this. So a similar situation is going on in Canada. You talk about blaming Trump. That's what everybody there is doing now. I believe he is a gift right now to Canadian politicians because they're able to point to him and continue to destroy the economy by trying to counter tariff and start a trade war that I don't think ultimately they can win. When it comes to this sort of people buying the narrative, is this a form of cognitive dissonance as people can't handle their quality of life deteriorating and that they just need somebody to blame? What do you think is the reason for this?
Well, there seems to be in your country and definitely in our country a hallucination going on where people want to blame others for their woes. And during the last 4 years of the Biden administration, we had raging inflation. There were people who pretended it wasn't going on the blue team. And look, people on the red team, there's some wackos on that side too. So there's extremes on either side. I like to live in the world of reality. And the reality for the average person in the last 4 years has been abysmal. And, what the reason why we got our call wrong is traditional economic measures were showing, the PMI was struggling, real estate home prices, while they're high, they're stagnant activity. The real measures of economic activity were going south. But this funny money, bringing in illegal aliens and government Mickey Mouse jobs gave the illusion that everything was fine. And now that the headlines are the stock market's going down, it's easy for these people to blame Donald Trump. And the tariffs can be blamed. The tariffs, I don't think that's the reason the market's going down. Economic activity started slowing immediately upon the inauguration of Donald Trump. We saw self-deportation of illegal immigrants because they realized there was a new sheriff in town, and a lot of people left. That caused new tenant rents to plunge in the fourth quarter of 2024. So, and the freezing of a lot of these government programs by Donald Trump and Dowd has already had immediate impact. The airlines are already announcing earnings misses because government bookings are down 50%. So this has had a real impact. This is a structural issue, and it's going to take time to unwind. And look, the people who want to believe and blame Donald Trump, they can do it if they want. But this is what Ronald Reagan inherited a similar situation in the 80s, and he took a lot of pain the first 2 years. He had a recession, double dip recession, and then in 83, 84, things started to get better. So that's the plan under Trump. Whether it can be executed remains to be seen.
And what is it going to take to wake people up from kind of this media stupor in which they're so easily brainwashed by talking heads on television, so-called experts that are presented to them? We saw a lot of this, obviously, during the pandemic, which we're actually going to discuss a little bit deeper in a Rumble exclusive that we're going to do where we can discuss some things that YouTube will not allow us to talk about. But I mean, just using the previous example, you talk to your average Canadian, many Americans, I'm sure it's the same. They just regurgitate talking points from CBC, which is kind of the state-controlled broadcaster there. It leaves little room for hope. Does civilization in Western countries need to completely break down for people to wake up and kind of take some accountability and take some responsibility and realize that the enemy is not across the border, but it's their own politicians?
Well, the good news is many people were asleep for a long, long time. And even I, who knew that things were not right, was shocked when the COVID situation occurred. I couldn't believe my eyes, but I kind of understood what was going on. The good news is that the COVID situation really woke up a lot of people. So there's more of us now than there ever have been that kind of see the world, through the lens of reality. And that number is only growing. And if you look at people like Elon Musk, I mean, he's saying things that you and I and others have been saying for a long, long time, and he's getting a lot of exposure. So it's really good. He's, the media is trying to demonize him and whatnot. And it's just interesting to see what's going on with the awakening. And as we roll through time, more and more people will wake up. But, it's going to be a struggle because there's still a lot of people whose worldview is that their leaders are glorious and they're leading them, to the promised land. And that's just not the case.
Well, a lot of what's going on in the world right now, first of all, I would like to say, yes, that comment about people waking up truly is bearing out. You're right. More people than ever are awake. Actually, the pandemic kind of woke me up to actually paying attention to what my politicians were doing. I actually fled Canada in October of 2021 and relocated to the Balkans. I'm currently in Serbia, to places where people were much, much more sane and rational when it came to rules and regulations and things like that. But nonetheless, a lot of the behavior going on in Western countries right now feels kind of like end of empire type of stuff. Unfettered mass immigration, as you mentioned, radical gender ideology being promoted as normal by the political class, insane levels of debt, the silencing of political opponents through lawfare. The list goes on. How do we make sense of this? Is this a, Neil Howe fourth turning situation? Is this part of a cycle of history that will eventually lead to a greater level of sanity? What are your thoughts?
There's a lot going on, and illegal immigration, let's talk about that for a second. In the U.S., when Biden got elected, normally net legal migration in the U.S. is 1 million people a year. Under Biden, we let in 10 to 15 million, blew up the economy, distorted it, and that's going on across the globe. My partner, Carlos Allegri, wrote a book in 2017, 18 called Economic Cycles, Debt, and Demographics. And so if you look at the big picture, and demographics, you can't trade on demographics, but they certainly can show you long-term trends. And demographically, Europe and the U.S. we're running into demographic problems. China hit a demographic wall in 2020. When you have declining birth rates with an aging population, you have a problem, and the debt becomes unsustainable. So illegal immigration is a way to take care of that, because when you import people into your country, and even if you use debt to do it, it creates economic activity and a replacement population that is not hip to what's going on. I think that is why that this policy, they say it's because there's all these poor people in these parts of the world and we have to let them in. No, it's a plan to take care of the debt and to inflate the economies.
And what do you make geopolitically right now of the U.S. versus the EU narrative that's going on concerning the war in Ukraine, with the Trump administration seeming to want to bring it to a close? All sorts of back and forth going on with Zelensky in Ukraine, kind of seeming to go along with it, then coming out against it. Obviously, there's a lot of people whispering in his ear, and the EU members are certainly some of those people. They seem intent on continuing and potentially escalating, talking about spending $600 billion on their military and, treating Russia as some kind of existential threat that is eventually going to move beyond Ukraine and start to attack other EU countries. What do you make of that whole kind of divide? Because the Biden administration was obviously very aligned with the EU and Ukraine in regards to the conflict before, and things have changed now. How do you see that whole scenario playing out?
From my standpoint, the Ukraine war was a grift, a giant European and U.S. grift. The fraud, the missing weapons, the chalets on the coast of France that some of the Ukrainian officials own, and also the kickbacks to the U.S. via different mechanisms. This has been a giant grift, and it's also a great way to unify your populations through propaganda that everything that's happening to you is the fault of Russia. Or this is classic you're having a structural debt problem. You have too many old people who are getting too many benefits and not enough young people to support that. And the debt's unsustainable. This is classic diversion tactics. So Donald Trump is restructuring the U.S. economy. There's no money for the Ukraine war, so the Europeans don't like that at all, because if the Ukraine war ends, they have to find a new crisis to justify their existence.
And do you think there's a possibility of the EU at some point dissolving or becoming into some sort of different form? Do you think there's an existential threat to the EU and perhaps NATO as well throughout this whole process?
Yeah, so my partner, Carlos Alegria, looks at the deep demographics of the southern countries versus the northern countries. And he says, at some point, it's not a question of if, but when the EU and the euro dissolves. That timing on that is difficult to predict, but a lot of the conflicts you're seeing in Europe are just that. There's been for a long time now, the northern countries kind of basically support the southern countries and their aging populations, and that's going to cause a rift eventually.
And speaking of out of control debt, we've also got constant debasement of fiat currency, a monetary system being manipulated. Gold does seem to be the perfect asset to hold in this environment. We're really knocking on the door of $3,000 gold as we speak. What are your thoughts on the gold market? Are you a proponent of having physical gold in your possession? And how do you anticipate gold potentially playing a role in the monetary system, if at all?
Yeah, so gold is going to be part of whatever new monetary system that's coming. And again, timing on that, it could happen this year or 5, 7, I don't know. So, but gold will be a definite part of it. Maybe cryptocurrencies or Bitcoin. Don't know. I'm not in the room. But gold as a part of your portfolio is obviously something you should consider. I would have coins because having gold bars is difficult. If things get bad, you can't scrape a gold bar. But having said that, gold is a commodity and it's volatile. And if there is a credit event and a systemic problem, gold will go down in a giant market crash, which in our report, we're not saying this goes systemic. If it does, we'll talk about it. But this could be just a run-of-the-mill deep recession, 50% stock market pullback. Gold should hold up well under those circumstances. And again, invest in gold, don't trade gold. And if you're looking at gold as a hedge against equities going down, just be careful, because in the great financial crisis, a lot of people, gold had been a bull market since 2002 going into 2008. Gold went down 50% in that subsequent credit event when the banks had problems. So gold is not immune to volatility, but I will point out gold quickly went to new all-time highs and recovered it. So just don't put all your eggs in one basket. Spread it around, but it should be a part of your portfolio.
And speaking of the commodities complex more broadly, there's a lot of guests on this show who talk about a coming commodities super cycle. The theory goes that when the broad market finally really enters bear market territory, capital will flee to the safety of hard assets. There's been underinvestment in the commodities sector for quite some time now. Do you think something like this could play out? And if so, which commodities could benefit the most from such an event?
I'm not going to make calls on specific commodities, but I will say this. The commodity super cycle, if that is correct, will come once we see the policy responses of the central banks and the governments. Until then, I think commodities are at risk of going down quite a bit into this economic slowdown. So if your thesis is there's going to be a commodity super cycle, you're going to experience some pain in the short term as economic growth slows. But then if you see the policy responses, and it's about more of the same crazy money printing and fiscal deficits, then yeah, we might see a commodity cycle on the other side. To your point, there has been underinvestment, and in the commodity world, there's an old saying: high prices solve high prices, meaning it brings capacity online, people build, people expand. And then that causes the commodity prices to go down. Low prices do the same thing. They cut back, and eventually prices go up because supply is limited. So the commodity cycle fixes itself. It's still a free market kind of situation, which I love.
And are there any areas outside of the U.S., whether that's emerging market or otherwise, when it comes to equities, that you think could make sense to look into at this point in time?
I will say this. The amount of foreign dollars put into the U.S. equity markets the last several years has been unprecedented, and so that's going to unwind. So that'll benefit the equity markets to some degree around the globe. Which ones I can't make a call on, but the U.S. is going to see an unwinding of its stock market and capital flows back home to other countries because a lot of foreigners have invested in our stock market because it was one of the only global major trading partners that had a positive GDP the last 2 years compared to other countries. That's unwinding.
And are there any other areas of the market that you're watching at present that you think present an attractive value proposition? Do you think it's prudent at this time to also be sitting in a decent amount of cash to potentially take advantage of opportunities should we see a larger correction in the broad market?
Yeah, I think cash is something that, I'm not an investment advisor going to give financial advice, but I will say having what we call dry powder cash to take advantage of lower asset prices is definitely something to do. Each person can make their own decision as to what percent of their portfolio they want in cash. And I don't see anything that I'd be buying right now. There's nothing that shows a deep value discount at the moment. Maybe there's some individual stocks out there, but the broad indices, no. Home prices, no. Commodities, I think, are going to take a hit. So I think Warren Buffett's nailed it. He was early, but Warren Buffett's waiting.
And you spoke about a recession in the beginning of the show, a global recession. Could we be in recession already? Because a lot of this data is obviously not reported accurately and later revised. And it's only when looking backwards that we can see that there was a recession or perhaps that one had already started. I mean, speaking more to the US in particular, but on a global scale as well, could we already be in a recession? In terms of this global recession that you see potentially unfolding, how serious do you think it could get?
Yeah, I think we may already be in recession. And when we look back, it may have started sometime last year. The question is the asset markets have been high on government spending, especially in the U.S. And as that goes the other way, the asset markets will catch up to the reality of the recession. And so there's two things: the real economy and financial assets. They decoupled the last couple of years. So as the financial markets correct, there'll be more media attention to the plight of the average person, but that it's been awful already for years. So it's a tale of two cities. The very rich and the very poor who get government subsidies. Everybody in between is the one footing the bill for this unprecedented government spending. So there'll be the biggest risk to a middle class person is a job loss because that's their biggest asset. So my advice to people that don't have a lot of assets and cushion, right now, make yourself as make yourself as valuable to your employer as you can be, and try to ride the storm out. Long term, if Trump can do what he wants to do, he's going to bring manufacturing back to the U.S. You have to understand, in the U.S. we've hollowed out the manufacturing base starting under Clinton, and it accelerated during the great financial crisis, and that's been at the expense of the middle class. So the idea is, if you want to have a civic society, you need to have a middle class. You need a middle class that isn't living hand to mouth. So that's the challenge, and the financial asset world is going to have to pay a price for that because it's been supported by money printing and government spending. The Fed, interestingly enough, raised interest rates from 0 to 5.5% to fight inflation. And we started to see, they took away the punch bowl. We saw the effects of that. We had bank failures in the U.S. in 2023. What filled the plug there was the unprecedented deficit spending and government spending to save the economy in the short term, quote unquote, the economy, whatever you want to call it.
Now, in terms of these tariffs that are being implemented by the Trump administration, it seems to be starting at least what the media is calling a trade war, both between the US and Canada, as I touched on earlier, as well as the EU. You mentioned Trump wanting to bring production back to the US, bring more economic growth home since it was all hollowed out. Now, is he playing the long game here? Is he, in your mind, do you think he's willing to take short-term pain for a potential long-term gain? Perhaps he's serving a 4-year term, and closer to, as his presidency moves on, people might forget in the beginning that there was this economic pain if it then results in something positive later on in his term. What are your thoughts on that?
Well, he's a one-term president, so he has stated himself he's not worried about the stock market. His Treasury Secretary has said the same thing. So if you're on Wall Street and your job's to manage other people's money, if you're waiting for Trump to get scared and respond and save the stock market, that the Trump put doesn't exist in my mind. In fact, Scott Bessent kind of said there is no Trump put. They're serious about what they want to do. And, I think this is not something that they're focused on. The trade tariffs are very interesting. They're more a negotiating tool. And that's why the headlines are so bombastic, 25%, 100%, 50%. They're basically getting people to the table. And, he can remove them overnight if he wants and if he gets what he wants. It's a negotiating tool. So I don't suspect these tariffs are going to be held up for the long term because we have the bargaining power in the U.S. We're the consumer of last resort. And, for someone like Canada, it's only a $64 billion trade deficit, but I think you guys export $400 billion to the U.S. and import $350 billion. Okay, so for us, our GDP is $29 trillion. For you, your economy is, I think, $2 trillion and change. So that's like 25% of your economy. Who's got the bargaining leverage? We do. That's as simple as it is. So he'll take short-term pain, and he'll bring these other countries to their knees. Europe is our biggest trade partner. They have $600 billion that they export to us. China has the biggest trade deficit. They come in close at $400 billion. So with a $250 billion trade deficit. So we got the leverage. We have the leverage.
Well, Edward, this has been a fantastic conversation. We are going to continue it over on Rumble to talk about the COVID shot. And you've written a book that covers this. You cover this a lot on social media. It is a topic that actually got one of my videos taken down on YouTube, which is why I now do some Rumble exclusive content. So we will be going there shortly. But for now, for people who want to hear more from you, where's the best place to go online?
Yeah, so our website is financetechnologies.com. It's spelled with a PH. You can purchase our report if you're so inclined. We have a lot of free resources and reports we put out as well that you can happily download and just read. And I'm also on Twitter at Dowd Edward, D-O-W-D Edward, and Getter at Edward Dowd.
Great. Those links will be in the description below for people who want to check that out. Thank you so much, Edward, and I will see you over on Rumble.
Thank you.
And thank you for joining us today. This episode is brought to you by ARC, Silver, Gold, Osmium. Head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com. Take advantage of the special Silver Kangaroos 2023 1 ounce mint fresh $2.07 premium. Well, supplies last, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.